Good morning. It is Tuesday, May 26, 2026. This is your deep dive daily briefing. I am your anchor, delivering a comprehensive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast on the world stage, where the high-stakes diplomatic maneuvering between Washington and Tehran has taken a more calculated and cautious turn. Following initial statements regarding a swift resolution via Pakistani mediation, both United States President Donald Trump and the Iranian leadership have actively tempered expectations of an immediate breakthrough. In a public statement from Tehran, Iran's foreign ministry confirmed that while notable progress has been achieved regarding a potential framework to end the West Asia war, a final comprehensive agreement remains distant. This sentiment was mirrored by President Trump, who stated that he is in no hurry to sign a deal unless it delivers a meaningful and permanent resolution. The central sticking point remains a sharp division in the scope of the talks. Washington, supported by Israeli intelligence insights, is demanding the verifiable dismantling of Iran's underground nuclear facilities and the total removal of enriched uranium as a condition for a final peace treaty, while Tehran insists the current negotiations must remain strictly focused on halting hostilities and ending the naval blockade.
Transitioning from the diplomatic tightrope in the Middle East to the legislative chambers of the global economy, major industrialized nations are aggressively rewriting their fiscal blueprints to shield domestic markets from prolonged energy shocks. In Tokyo, Prime Minister Takaichi Sanae announced that the Japanese government is finalized to draw up a massive supplementary budget exceeding 3 trillion yen, equivalent to roughly $19 billion, for fiscal 2026. This emergency fiscal package is designed specifically to cushion Japanese households and industries from the inflationary pipeline generated by 3 months of maritime disruptions in the Persian Gulf. This defensive economic policy aligns with broader international interventions, as seen in Singapore, where the Ministry of Trade and Industry maintained its annual growth forecast at 2% to 4% due to resilient first-quarter electronics demand, while explicitly warning that the ongoing conflict continues to cloud the mid-term global macroeconomic outlook.
This environment of tempered diplomatic expectations and persistent energy-driven inflation is driving a profound reassessment of financial stability risks across international capital markets. World oil prices experienced a sharp bout of volatility, tumbling initially on optimism over a rapid agreement before stabilizing as both sides downplayed the immediacy of a deal. This persistent instability has prompted the International Monetary Fund to issue a stark warning during its Article 4 mission concluding statement for Ireland, urging European economies to maintain a highly vigilant stance regarding non-bank financial sectors and systemic data gaps. Financial authorities are advising governments to prioritize targeted assistance for vulnerable populations over broad-based tax cuts or price controls, as the compounding effects of elevated maritime freight indices and regional defense expenditures continue to stress global credit markets and keep sovereign bond yields locked at elevated levels.
Turning our attention to the technology sector, the focus has shifted toward fundamental architectural innovations as the industry attempts to sustain the artificial intelligence revolution amidst deepening hardware and power constraints. At the 2026 IEEE International Symposium on Circuits and Systems in Shanghai, Huawei delivered a landmark keynote introducing the Tau scaling law, a new semiconductor design principle that proposes replacing traditional geometric scaling with time scaling to steadily improve transistor density and compress signal propagation delay. The company confirmed that its upcoming Kirin chips, scheduled for release this autumn, will be the first to adopt this architecture, redefining interconnect protocols via a unified bus system to achieve native memory semantics for massive computing superpods. This structural shift in hardware design occurs alongside software-level consolidation, showcased at Google I/O 2026, where the unveiling of Gemini Omni and agentic background search tools signaled an industry-wide push to minimize digital friction and reduce data center compute overhead.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce, which are now absorbing the structural changes of a prolonged maritime impasse. Despite the marginal movement of select vessels, shipping lines continue to operate under high-risk navigational guidance, keeping the Cape of Good Hope detour as the primary baseline for Asia to Europe trade lanes. This extended routing has compressed global container fleet capacity to near zero idle levels, locking in elevated transport costs. To mitigate these structural pressures, advanced economies are deepening regional trade ties, exemplified by Canada's Ministry of Immigration announcing an immediate transition to streamlined electronic travel authorizations for eligible business travelers and citizens from Indonesia and Malaysia, an operational shift designed to diversify strategic partnerships and secure resilient, alternative import-export corridors across the Indo-Pacific.
In summary, the global landscape is defined by a tempering of expectations for an imminent U.S.-Iran peace deal as Washington demands nuclear concessions, occurring as Japan readies a 3 trillion yen emergency energy subsidy budget. The IMF warns of financial stability risks amidst oil market volatility, while Huawei introduces the Tau scaling law to bypass traditional semiconductor limits, and the logistics sector relies on strategic Indo-Pacific trade corridors to navigate permanent maritime disruptions. Based on the current trajectory, I predict that the deliberate cooling of rhetoric by both President Trump and Tehran indicates that the structural premium on global energy and logistics will remain a fixed reality through the summer. By linking the reopening of the Strait of Hormuz to the permanent dismantling of Iran's nuclear infrastructure, the United States has transformed a maritime dispute into a fundamental geopolitical showdown. Consequently, crude oil prices are unlikely to experience a sustained drop anytime soon, which means Japan's 3 trillion yen supplementary budget will serve as a baseline model for other advanced economies facing fiscal strain. Shippers and technology firms must accept that the high-cost logistics environment and the push for localized high-efficiency hardware like the Tau architecture are no longer temporary workarounds, but the permanent cost of doing business in a fractured global order.